Good morning, everyone. I am Karen Jean Cantoy and I am the second reporter of the Group 9. So, my topic we will start at the prepaid expenses until the cash basis deduction. So, prepaid expenses, prepayments are deducted in the future period as they expire or as they are used in the business or profession of the taxpayer. The advanced deductions of prepayments, if material in amount, will cause significant distortion in the income. Hence, it is not allowed. So when we say prepaid expenses, so those are mga expenses na already paid. So for the prepayments, ang prepayments it only means na kanang nagabayad ka in advance. So for the advanced deductions of prepayments, like for example, if ang amount sa isa ka material is mag-cause og mess or changes sa income sa isa ka tao, then dili na siya pwede or dili na siya allowed nga madidakan ang imuhang prepayments, which is katong mga advance payment nimo gibalo. So for the illustration, in 2012, Zifra Incorporation paid 300,000 as a 3-year advance rental for the lease of a building to commence 2013 through 2015. To close the lease contract, Zifra also paid the lessor a lease bonus of 30,000 pesos. The 30,000 pesos lease bonus is not an expense, but a prepayment that should be amortized together with the 300,000 prepaid rentals. This should be amortized as 110,000 amount when expense from 2013 to 2015. So as for that, in the year 2012, ang Zipro Incorporation is nagbayad sila og 300,000 as a 3-year advance rental sa isa ka building. And kanang 300,000 is that is good for the year of 2013 until 2015. So in order to close the contract, si Zifra is magbayad pud siya og less bonus sa iyang lessor, which is equivalent to 30,000. Then ang kanang 30,000 dili na nato siya makonsider or matawag na expense, but matawag nato na siya as prepayment na kailangan i-amortize together with the 300,000. So all in all, once ma-amortize na siya, ang mabayadan lang ni Zifra is 110,000 amount rent expense from 2013 to 2015. Kay prepayment man siya, so dili siya ingon na in isa lang gid ka tuig bayadan like sa isa ka tuig iyag yung hotdog og bayad. Kaya naka-prepayment man siya, dapat anamon lang niya og bayad. Mao nang each year magabayad siya og 110,000 amount para ma-covered na iya ang baydonon nga gikan magsugod sa 2013 na baydonon hangtod sa 2015. Immaterial capital expenditures. The acquisition of item of property, plant and equipment, inventories or prepayments of expenses which are relatively immaterial in amount may be deducted outright as expense upon acquisition, as this will not materially distort net income. Moreover, the inventory method may likewise be impractical to use for such items. So, immaterial capital expenditures, those are expenses for small investments or improvements that aren't big enough to have a major effect on a company's finances. They're still important for maintaining or growing the business, but they're not large enough to drastically change the company's financial situation. So for the special consideration with deductions, so first is the property repairs and improvement, property acquisitions related costs, securities issues costs, manufacturing expenses, effects of accounting methods, and effect of value-added tax. Property repairs and improvement. Repairs that significantly increase the value or prolong the useful life of properties are capital expenditures. These are capitalized to the adjusted tax basis of the property and are included in the subsequent annual provision for depreciation. Repairs that merely restore the value or functionality of the property without causing increase in fair value or useful life of the property shall be deducted as outright expense. If the fair value of property increases due to repairs, improvement, or additions, the actual cost of the repairs, improvement, or additions should be capitalized not to exceed the appreciation in fair value. If the fair value of the property is not determinable, the excess of the actual repair cost over the tax basis of the property is presumed a capitalizable increase in fair value. Improvements and addition to properties normally increase the value or useful life of the properties. Hence, these are capitalized and depreciated. So all in all, ang repairs and improvement is dapat good nakakuha siya naka-capitalize and depreciated. For the illustration, the building of B Corp with a carrying value of 1 million was partially dilapidated through long usage. A repair of 500,000 was made on the property. For the case number 1, no increase in property value or useful life. The 500 repair is deductible as repair expense. The tax basis of the property remains at 1 million. So in this scenario, the repair made for the property does not result in an increase in its fair value or useful life. The repair cost is 500,000 but it does not enhance the property beyond its original condition. Therefore, the entire repair cost of 500,000 is considered as a deductible repair expense. The tax basis of the property which is used for calculating future depreciation expenses remains unchanged at 1 million. So for the case number 2, property fair value increased to 1.8 million after the repair. The entire 500,000 repair is capitalizable since it is less than the 800,000 appreciation in the fair value. The adjusted tax basis of the property for purposes of future provision of depreciation expense shall be 1.5 million. So in this case, the repair made to the property results in an increase in its fair value to 1.8 million, which is 800,000 higher than its original carrying value of 1 million. Since the repair cost of 500,000 is less than the appreciation in fair value, which is the 800,000, the entire repair cost is considered capitalizable. This means that the repair cost is added to the adjusted tax basis of the property. The adjusted tax basis now becomes 1.5 million. So for that, to get that is original tax basis is 1 million plus repair cost of 500,000. This adjusted tax basis is used for calculating future depreciation expenses, reflecting the increase in the property's value due to the repair. Case number 3. Property fair value increased to 1.4 million after the repair. The 500,000 repair cost shall be capitalized only to the extent of the 400,000 increase in fair value. The excess 100,000 repair cost is expense. The adjusted basis of the property for future depreciation shall be 1.4 million. So for the case number 3, the repair increased the property's value by 400,000. So only 400,000 of the repair cost is capitalized, while the remaining 100,000 is expense. So for the adjusted tax basis for depreciation, it will become 1.4 million. For case number 4, 1.2 million repair cost was made to restore the property. Fair value after repair is unknown. So 1 million is deductible as repairs expense, while the excess 200,000 is a capitalizable improvement. The adjusted tax basis of the property shall be 1.2 million. For the case number 4, if the fair value after repair isn't known, only repairs costing up to 1 million are deductible. The extra 200,000 is considered a capitalizable improvement. So the adjusted tax basis will become 1.2 million. So case number 5, no increase in fair value but with increase in useful life. So the 500,000 will be capitalized. The adjusted basis for future depreciation shall be 1.5 million. So for in this case, the 500 repair is capitalized because it increases the property's useful life. So the adjusted basis for depreciation will become 1.5 million. So as per the replacement of old or destroyed property, the tax basis of the old property is deductible as a loss, but the cost of the replacement property is capitalized subject to future provisions for depreciation. So for the illustration, the office building of Andrex Corporation with a carrying value of 4 million was totally destroyed by an earthquake. The same was replaced with a new building at a total cost of 8 million. So the 4,000 will be deductible as loss, while the 8,000 will be considered as the capitalized as the tax basis for the new building subject to the future provision for depreciation. So for the costing of demolishing old buildings, when land was acquired with an old building in it but was not intended to be used by the buyer, the entire amount paid is assigned only to the land. The cost of demolishing the old building, net of any salvage scrap, are treated as additional cost of acquisitions of the land. The cost of raising or removing an old building to give for the erection of another in its place is not a deductible expense, but capitalized as part of the cost of the replacement building according to Priscilla Estate versus CTA. So as per the illustration, determined to be insufficient for business use, the two-story building of Pingwit Corporation was decided to be replaced by a 9-story building. So the two-story building with a 1.5 million carrying value was raised at a cost of 600,000. A 9-story building was constructed in its place for 1.2 million. As per the cost of demolishing old buildings, so the cost of demolishing value, it refers to the expense incurred to tear down or dismantle a structure or part of a property. So this cost is often associated with preparing a site for new construction or removing unsafe or outdated structures. So as for the illustration, so for the based on the illustration, so the carrying value of the old building is equivalent to 1.5 million. This amount will be recorded as a loss because the building was demolished. For the demolition cost is equivalent to 600,000 pesos. So this cost is included in the cost of the new building And as for the construction cost of new building, it is equivalent to 1.2 million. So the total cost of the new 9-story building is calculated as follows. So total cost equals construction cost plus the demolition cost. So total cost equals 1.2 million plus the 600,000 is equals to 1.8 million. However, the document mentioned the cost of the new building as 12.6 million, which seems to be a typo or requires additional context. So based on the provided numbers, the correct total cost including demolition should be 1.8 million. For the asset acquisitions related costs, all costs directly related to the acquisitions of an item of property, plant and equipment such as in-transit insurance, title guarantee insurance, freight, then finder's fee or commissions, import duties and other taxes, excluding VAT for a VAT taxpayer, are capitalized as part of the cost of the property subject to depreciation. So as for this, so when you buy property, plants, or equipment, you need to include all the costs related to getting these items ready for use. So this costs become the part of the total cost of the item and are depreciated over time. This includes expenses like in-transit insurance or insurance while the item is being shipped, then title guarantee insurance or insurance to protect against title issues, freight or shipping cost, vendor's fees or commissions. So these are fees paid to someone who helped find the item, then import duties, taxes paid to bring the item into the country, then other taxes which include excluding VAT if you're a VAT taxpayer. So all these costs are added to the purchase price and treated as part of the cost of the item for accounting purposes. So for the security issues cost, expenses of issuing or debt securities, example stock or bonds, such as cost of registering shares of stock to the Securities and Exchange Commission or SEC, cost of printing bond or stock certificates or broker's commission on selling stocks or bonds are not deductible expense against gross income. They are deducted against the proceeds of such securities. So as for this, as for the security issues cost, expenses related to issuing stocks or bonds such as registering shares with the SEC or Security and Exchange Commission, then printing bond or stock certificates, then brokers commissions. These are these costs are not deductible against gross income. Instead, they are subtracted from the proceeds of these securities. So as for the manufacturing expenses, plant or factory expenses such as cost of raw materials and supplies used, labor, and other overhead like plant, utilities, maintenance and security, supplies, and depreciations are capitalized as part of the goods being processed and are expensed through cost of sales when sold. So for the manufacturing expenses, expenses for running a plant or factory, including cost of raw materials and supplies, labor cost, and then overhead cost like utilities, maintenance, security, supplies, and depreciation. So these costs are added to the value of the goods being produced and are only expensed as part of the cost of sales when the goods are being sold. So now let's proceed on the illustration. A manufacturing firm had the following data in March. So finished goods or undelivered work orders. So for March 1, it has the value of 150,000, and for the March 31, it has the value of 110,000. Work in process or unfinished work orders. So for the March 1, it has the value of 380,000, and as for the March 31, it has the value of 250,000. For the raw materials, for March 1, it has the value of 30,000, and for the March 31, it has the value of 45,000. So the following costs and expenses were incurred in March. So the total raw material purchases has the value of 140,000, factory supplies used 30,000, factory salaries and wages 600,000, factory utilities expenses such as gas, water, and electricity is equivalent to 70,000, machinery repair and maintenance is 20,000, plant depreciation is 100,000, office utilities is 80,000, office building depreciations is equivalent to 50,000, administrative salaries is equivalent to 120,000, sales salary is 50,000, and commission expenses is 20,000. So we're going to tackle here the non-manufacturing cost, administrative and selling expenses. So non-manufacturing expenses, commonly classified as administrative expense and selling expenses in financial accounting methods adopted by the taxpayer. So in getting the administrative expenses, we were going to include here the office utilities which has the value of 80,000. Office building depreciations 50,000. Then administrative salaries 100,000. So ato ra na sila ato ra nang i-add ang tanan karong tulo. Then total deductible administrative expenses will equal to 250,000. Mao na siya ang equal kay balik ka ng 250,000 mao na siya ang ato ang administrative expenses. And as for the selling expenses, so we're going to include here the sales salaries, which is 50,000, commission expenses 20,000. So same process kay ina, i-add lang nato ang 50,000 and 20,000, then mauna din na siya ang total deductible selling expenses. So ang total deductible selling expenses is equals to 70,000. Manufacturing cost. Manufacturing expenses should not be expensed outright but are capitalized to inventory, then expensed through the cost of goods sold. So for the cost of goods sold, I will include here the raw materials beginning 30,000, raw materials purchased 140,000, then last it is raw materials ending 45,000. So for the raw material in getting the raw materials used total, so kailangan lang to siya i-add ang tulo tong 30,000, 140,000 and then 45, and that will equal to 125,000. So mauna na siya ang total raw materials used. So for the conversion cost, factory labor, it has the value of 600,000, factory supplies 30,000, factory utilities expenses 70,000, machinery repair and maintenance 20,000, then plant depreciation expenses is 100,000. Ato lang na siyang total, then equal na siya into 820,000. So man na siya ang ang total di ato tanan. So para makuha na to ni ang 945,000, kailangan na to i-add ang 800 ang diri sa plant depreciation expenses na 800, overall total na siya ang 820,000 sa katong raw material used gain ang atong gi-compute, which is equivalent to 155,000. So kung i-add nimo ang duha man siya ma-equal siya og 945,000. So i-add day nato ang in-process work beginning nga 380,000. So total manufacturing cost placed to process is equivalent to 1,325,000. So i-add po nato ang less in process work ending nga 250,000. Cost of goods finished this period is equivalent to 1,075,000. Add finished goods beginning 150,000. So ato to siyang i-add tanan, din mo total na siya og 1,225,000. So ang less finished goods ending, which is equivalent to 110,000, ato na siyang i-minus sa 1,225,000. ang 1,225,000 ug ang 110,000 i-minus nato na siya, mao na na siya ang cost of goods sold, which is equivalent to 1,115,000. Similar to the trading firms, the cost of goods sold of manufacturing firms is deducted against sales in determining the reportable gross income from operations. So, effect of accounting methods on deductions. The methods adopted by the taxpayer in accounting for expenses have a significant bearing on the deductible expense. It must be recalled that under the cash basis, expenses are deductible when paid regardless of when they accrue while under the accrual basis. Expenses are deductible when they occur regardless of when they are paid. However, prepayments and capital expenditures cannot be deducted outright. Under the cash basis deductions, it includes the following. So cash expenses are paid, amortization of prepayments, depreciation of properties, then cash basis deductions. Then under the accrual basis, deductions include the following. Accrued expenses are paid or unpaid, amortization of prepayments, depreciations of properties, then accrual basis deductions. So for the illustration, Chelsea Corporation had the following items of expense and expenditures in 2015. So for the purchase of equipment paid in cash, it has the value of 200,000. Freight and purchase of equipment paid in cash, 20,000. 2015 salaries expenses paid this period, cash expense, 50,000. Supplies bought in 2014, half was used in 2015 is equivalent to 16,000. Then depreciation expense on property, 24,000. 2015 expenses not paid this period or accrued expenses is 12,000. 2016 expenses paid this period or prepaid expense is equals to 18,000. So required determine the total deductions under. So, kailangan na natin i-determine ang mga total deductions sa cash basis of accounting and the accrual basis of accounting. So, for the cash basis, in getting the cash basis deduction, so salaries expense or cash expense, which is 50,000. Supplies expense, ang supplies expense, inanin nato siya pagkuha 16,000, i-times na to siya sa 1/2. So, mao na siya mo-equal siya og 8,000. Depreciation expense is equals to 24,000. Then, i-add na nato na ang tulo. Then, mao na dayon ang atong gitawag nga total deductible expenses, which has the value of 82,000 pesos. So, note that accrued expenses are not deductible under cash basis. Number 2, capital expenditures and prepaid expenses cannot be deducted in the current period but in the future period they relate to.